A man becomes wise when he learns to filter the signal from the noise and the truth from the lies in order to find the diamonds in the dirt. My friends, we filter the signal from the noise and the truth from the lies by following price movement and volume and the trend. Remember, we are not trading off the little chart, off a little short chart, looking for market inaccuracies, market anomalies. No, no, no. We are looking for the big money and the big moves for our practice trades on the big charts. That's why we trade off the weekly chart. And that's why those of you who have followed us see how successful you can be if you team up volume like the traders of old did with price movement. And of course, we use the Heikin-Ashi candlesticks for obvious reasons. In fact, today at the end of the video, for those of you who haven't taken our in-depth training on the Heikin-Ashi candlesticks, I'm going to put that at the end of the video today for you. And of course, for our subscribers, we'll have the special training as we always do in your show notes. If you're not a subscriber, go ahead and sign up. It's free at chartingwealth.com. That list is never spammed, never shared. Let's jump into these charts. And we see the S&P 500 just barely up for the day. NASDAQ 100 just barely down. Bonds down, gold down, Bitcoin down, exactly the same percent as bonds. Don't know why. I see that every now and then. Let's look at what's going on with the S&P 500. As we look at the week, we can see this week's high, 477.55. Last week, 475.90. So, of course, we're up a little bit. I mean, again, we're talking a $470-something a share ETF, but we are up. And again, things have been ticking up slowly but surely over these last few weeks. And particularly, you can see where the volume is now. It's going into Friday. It's about half of of the average. And again, not to be unexpected, this is a slow week. Why is it a slow week? Because we're at the end of the year. A lot of folks are still out on their Christmas breaks as this year slowly grinds to a halt. Don't forget another short week next week because of the New Year's holiday on Monday here in the States. But we see, as we look at the weekly trend line on both the 2-day and the half-day, we can see that we are a nice distance away from that, continuing to click up. First day of the latest 2-day candle, again, up nicely. We can see where things bounded up more in the afternoon, relaxing a little bit. More in the morning, relaxing a little bit. In the afternoon, where are we on the NASDAQ 100? It was down just a wee bit, bounded up in the morning, like the S&P, pulled back a little further in the afternoon. 2-day, again, nice distance between the trend lines and the candles, and of course moving up to a higher high this week. Candles so far might be a little bit smaller, but they've been small candles these last few weeks. Of course, we can stretch them out to be larger. But again, as we compare them to these prior candles, they are a bit smaller after we had that pullback week where things slacked up at the beginning of December, the week beginning December the 4th. But again, still moving up. This has been a beautiful trade so far. What about 20-year bonds? Pulling back 0.73% for the day. See where it bounded up in the morning and then pulled back in the afternoon. Again, we're nicely above the weekly trend line on the 2-day and the half-day. And again, moving up, smaller candle this week. Again, volume decreasing significantly. We'll continue to keep an eye. So far, been a very nice trade on the upside for us. Now, gold. Gold pulling back 0.58%. You can see in the morning. Didn't hit the high of yesterday and then down in the afternoon. Now, again, we're paying close attention to this. Why? The volume, is a little bit, it's a little less than half, it looks like there. It has been decreasing the last few weeks, even though it's been moving higher. Don't like that kind of divergence. We had things peak, of course, back on the 27th of November, then fall off. Then things started moving up last week, the 18th, beginning the 18th. This week, moving higher than that peak back in November, end of November, but again, without volume. So we will keep our eyes on things. Like I said, haven't pulled the trigger on that trade. Don't feel comfortable doing so because of the lack of volume and commitment by the market. Let's see where we are on Bitcoin, down for the day 0.73%. Like I said, the same percent as the 20-year bond fund, TLT. We can see down in the morning, a little further down in the afternoon, still above the weekly trend line on the 2-day, on the half-day, touching it on the 2-day. And again, we can see that the angle of up movement has slackened. It's not flat, but it's not all that far from it. So we will keep an eye on things like we talked about a fair bit. We've seen Bitcoin pop up and pull back. We saw it pop up, really didn't pull back. As we talked about yesterday, it continued to click higher here, starting on November the 13th, the week beginning then the 20th and the 27th. Then it popped up. Now it's sliding sideways and it is not getting higher. So we will keep an eye on things and just see where it is going. Could just be digesting, getting ready to take off again. Bitcoin's been a lot in the news, and that may be what's about to happen. So we'll continue to wait, watch, and see if you pulled the trigger on that Bitcoin trade when this thing started to take off. Of course, there's no reason yet to pull that trade. That is where we are as we end Thursday, go into Friday with this shortened trading week. Looking forward to another shortened trading week with Monday off. So thanks so much for being with us, folks. God bless. All the best from the whole team at Charting Wealth World Headquarters.